Hi folks, the first step to home ownership for many people is getting a mortgage. Today we're going to talk to a mortgage lender to find out the process for starting your journey and what those mortgage lenders may offer to help you get a home. You may be surprised. Hi folks, I'm Tom Mason with West USA Realty.
I'm Andrei with Fairway Mortgage.
Where are you located, Andrei?
I'm located on 59th Avenue in the 101.
Okay, just north of the 101?
Yep.
In the shopping mall there?
Yep, right next to the EOS Fitness.
Yeah. So I'm a real estate agent. Andrei's a lender. We wanted to go over a little bit of what's coming up in the market, what we can expect in September with Fed rate cuts that have already been announced, and see if there's anything that can help you prepare yourself for when the market really opens up. One thing we really want to make sure is you get into the market early, because once the market opens up, you're going to have a lot of competition and prices are going to go up. So the earlier you can get in there, starting with getting pre-qualified or getting ready, the easier it's going to be for you to finally get that home. And that's what we're here for, to help you build that generational wealth, get yourself a home, make it comfortable for your family going forward in the future. Andrei, what kind of special projects or lending options do you offer right now?
Yeah, so right now, a really hot topic has been our grant program. So Fairway has a grant program. It's a true grant, so there's no repayment required. There's no higher interest rates or anything like that. It's a $7,000 grant. It's for conventional buyers, so it'd have to be a conventional loan product. And basically, we determine whether or not a client is approved for that grant based off of where they currently live. So they would apply with us if they live within a specific census tract that's underserved, basically. They may qualify for that $7,000 grant. They have to be a first-time home buyer, but with that grant, they get the $7,000. They get a 1-year free home warranty, reduced title fees, and a free appraisal. So it's actually more than just $7,000. But this has been a really great product for us because it's really helping clients with their down payment. A lot of the programs out there for down payment assistance tend to be a bit more expensive. So yes, there is 0% down programs, but there's going to be a higher APR, underlying cost, or expectations of repayment if they sell the house. With our program, it's none of that. It's basically just a true grant, $7,000, and it's theirs to keep.
Great. That's a really interesting sounding program. Are there any locales here in Phoenix that this works the best?
Yeah, I've noticed that the West Valley tends to be the census tracts that are approved for that program. Typically, it's going to be, I would say, west of the I-17, south of the 101, and north of the 10. So that whole, basically, Glendale, Peoria, and then you have your further West Valley. So you have Litchfield, Avondale, Tolson, Buckeye especially. So it does go a bit further west.
South of the I-10 even.
Yeah, so south of the 10 for Buckeye, and then once you kind of get to Verrado, which is also Buckeye, I think that's where it tends to kind of cut off a little bit.
Yeah.
So I would say, if you have a client, if you're an agent or you are a consumer trying to buy a house and you live in the West Valley, chances are you might be approved for this program. It's super easy. Just you'd have to call us and ask us, give me your address. I look it up and I can let you know if you qualify.
Tolson's a really hot place right now, mostly because of new builds. So I don't imagine this would work as well with new builds, because the new builds really want you to finance with them, right?
Yeah, so I mean, it would work on that property, but you would have to then compare the incentive that the new build offers as opposed to the incentive that we can offer, and just see which one's better. So most new builds, they offer two kinds of incentives. They'll offer closing cost incentives and they'll offer rate incentives. This grant program is different because it's not just closing costs, but it's also down payment. Those two things are different because down payment, sometimes you can't get around, you can't have someone else help you with your down payment. You have to come up with that yourself. So if maybe, I can get $15,000 from a new build, but if I don't have the down payment, I have to find a way to get that. So sometimes this could be a way to where you could use that $7,000 for the down payment, try to negotiate a concession from the new build, and if it works out, then we can work together.
And if you're buying a resale home, and you bring that $7,000, that's being part of the down payment, and then you can always ask for concessions. In this market, over 50% of the homes are giving concessions. Because the interest rates are so high. And a lot of people are using those concessions to buy down their interest rate as well. So now you have down payment. If you can get concessions, you'll be able to use that for buying down the rate,
Yep,
get yourself
exactly.
a better rate. Some of these new builders are competing with resale and offering lower rates, at 4.99%. What's the interest rate today that you're offering?
Yeah, so with like an FHA loan, we're going to look at maybe high fives, so maybe 5.75. For a conventional loan, it's closer to the low sixes. FHA can be a bit more competitive with their rates, but they do charge like an upfront fee, so that's financed into the loan. So typically that's what causes the rate to be lower, regardless of the fact every person's situation will be different, but we're looking in a range of high fives to low sixes.
Sure.
And that's going to be par. So basically if you have additional points, you can buy it down, you can get it into the fives or lower fives as well.
So with the FHA, do they still require you to maintain mortgage insurance throughout the life of the loan?
Yeah.
So that's the one thing about conventional loans is once you pay off 20% of your home, you can drop the mortgage insurance.
Exactly.
But FHA they're going to charge you over time, so they can offer that lower rate because they're going to get that money back over time.
Exactly. Yeah. They have the lifetime mortgage insurance, and then they also have an upfront 1.75% that's financed into the loan. The benefit of an FHA loan is it really is for first-time home buyers, but it kind of lowers the barrier of entry. So you could have a 580 credit score, you could have a 620 credit score, and you can get the same rate that someone would have with a conventional loan with a 780 credit score. Sure. Yes, the underlying costs are a little bit higher, but it gives you the opportunity to get into that home and take advantage of that appreciation. And then the idea would be that once you have more equity in the home, you refinance into conventional loan. Yep.
So that's really interesting. Not only FHA offering a lower rate, but you also have the grant program that can help along. What does someone need to do in order to be prepared to take on a loan?
Yeah, it's a great question. The scope of getting qualified for a loan, I want it to seem pretty simple, right? So we always look at three things. We look at employment, down payment, and credit. So your income tells you what you can afford. Down payment is going to be your necessary or minimum requirement for your equity, and then your credit kind of shows us what your repayment history is in the past. So to prepare, focus on those three things. Don't focus too much on everything else. Try to make sure that you have lower expenses, right? So lowering expenses means don't go buy a new car, don't try to take on new debt, don't take on new personal loans. Those things tend to be the biggest pain points because their payments are very, very high.
Sure.
So things like that, reducing the amount of expenses you have on a monthly basis can help. Saving is a good thing to do as well. Obviously having reserves is important. So even if we do like a down payment assistance or we do a DPA program, sometimes we need to have the client have $6,000 in reserves or $7,000 in reserves after the transaction. So it's, we can, help them with all their costs, but they should still have a good savings themselves.
Okay, so employment, down payment, and credit, three biggest things. So what if I'm self-employed? Like I'm a real estate agent, I have my own company.
Yeah.
Even though I fall under West USA Realty, I'm really a contractor. So what do I do if I'm looking to get a loan?
Yeah, so if you're self-employed, whether you file your taxes under a Schedule C as an individual proprietor or S Corp or a corporation, lenders will look at your total gross income and subtract your expenses and then take your net income. So if you're an agent and you file your Schedule C, we're not looking at your gross. We do want to look at your income after your expenses.
So as an agent, I spend a lot on marketing for my clients to sell their house.
Yeah.
I might help with some of the issues that we need to get over. So even though I make X amount of dollars, I really take home far less. And so I really need to focus on what I'm taking home and bring that into you guys to show you what I've made. And you need 2 years of that?
2 years. Yeah, generally I always ask for 2 years. If you've been in the industry or had your business for over 5 years or 5 or more years, then you become eligible for us to use 1 year.
Oh, okay.
That's not always guaranteed, so I always say, hey, let's just go conservative and get the 2 years.
Sure.
Let me run it through, see if we can do 1 year. But 5 years or more typically leads to 1 year taxes.
Right. So the second point, we talked about employment, down payment, credit. Second point, down payment.
Yeah.
Is there any limit on what can be gifted to someone to help with a down payment?
No, so no limits on a gift.
So friends, family, if they are going to lend you that money off to the side, is it okay?
Well, it would have to be family, so not friends.
Okay.
So family would be like your father, mother, sister, brother, uncle, that's fine. So it doesn't have to be like super close relatives. It could be like a cousin if that was the case.
Sure.
And as far as them giving you the gift, I always say have them just keep the funds in their own account. We document that they're going to give you a gift, and then they can send the money directly to the title company when they're in escrow. It's just a lot less documentation. Sometimes when your family member gives you a gift, maybe they say, I'm going to gift you $20,000, and you take that $20,000 in cash, but you deposit $19,500. And so now we cannot trace or paper trail that $19,500 to that $20,000.
Okay.
And so it can cause a little bit of issues there.
All about paperwork, right?
Exactly, yeah.
Right.
So if you have a family member willing to give you a gift, just ask them, say, hey, just hold on to it for now. And then once we're actually under contract, your lender will give you the next steps as far as how to send it.
So the last piece of that three-part puzzle is credit. What if I don't use credit cards?
Yeah, so if you don't have any credit, there is a way to get an approval using non-traditional credit. So that's typically documenting 12 months of a payment history on something like your water bill, your phone bill. So utilities and phone bills are typically the biggest things. A card.
Does rent fall in there too?
Rent does qualify as one of the factors, but it's still not by itself a sufficient determinant factor for a 12-month history. Yeah. Sure. So typically with non-traditional credit, it is more difficult to get an approval. Almost, I would say, general rule of thumb is try to have 1 or 2 trade lines and have them be at least 12 months old.
Okay.
But there are ways sometimes where we can make something work. If, let's say, they don't have credit, you go get a credit card. Typically, it takes about 4 months for their credit to start reporting. Their scores will start to populate, and then we can consider using those scores as well.
Next question is pre-qualification. Let's say I have a client, they want to go see a house. Under the new rules, I have to get them to sign a document saying we're going to go see the house.
Yeah.
At the same time, I want to get them pre-qualified. How long does it usually take to get someone pre-qualified or for that loan that they're going to need?
Yeah, so for pre-qualification, I like to work on a loan for a couple hours just to kind of make sure I have all the possible situations kind of thought about and any things that could go wrong, I have a plan B for that as well. The actual pre-approval or pre-qualification process can take a couple days because 1, the client has to give me their information, and 2, I have to verify the information they give me with their documents. And so not everyone has all their taxes or their W-2s and pay stubs right on their desktop when I talk to them. So it might take maybe a day or 2 for them to give me those documents. But in a perfect world, if they had those documents, if they gave it to me, if you call me in the morning, I get your pre-qual, either that same morning or that afternoon, as long as I spend enough time working on that situation.
So again, going back to someone who's self-employed, it makes it a little bit tougher for you. What if they don't have enough, they file their taxes and they're not showing enough income? What can you do to help them?
Yeah, so if they've already, tax season's only a few months out of the year. And so let's say we're in July, they filed their taxes for 23, their income wasn't enough and they want to buy a house right now, there's an opportunity. If their income was not enough on their taxes, we can do something called a bank statement loan. So a bank statement loan will basically be us taking either 24 months or 12 months of their business bank statements and then looking at their deposits and taking that as their income, basically. Depending on the kind of business they have, we will allocate a specific expense ratio. So that meaning that, let's say you own a business.
Math now, I'm getting worried.
Yeah. Well, just to keep it simple, like let's say you have a bunch of employees. Maybe your expenses from the income you're earning is 50%, because you have a lot of overhead.
Sure.
Depending on the kind of business you have, I will, take your bank statements, calculate the income, allocate that expense ratio, and then we can usually get a lot more income than what the taxes show because it's just straight up what's being deposited into your bank statements.
Okay, cool. All right, so one thing I think is going to happen, and I don't know, I'm not a lender. I do invest in the market, so I do watch the market ebbs and flows.
Yeah.
We heard Jerome Powell come out today and say they're going to definitely cut by at least 25 basis points in September.
Yep.
So that handles the bank fund rate, but that doesn't really directly impact mortgage rates.
Mm-hmm.
But we can anticipate if they're lowering the federal fund rate, that inflation is coming down. So you may see a lowering of other rates. Do you agree with that? Do you think that's 100%. Possible?
Yeah. So same thing. I mean, when the Fed was increasing rates, it wasn't always a one-to-one thing where the Fed would raise rates today and our rates would go up at the same exact time. But obviously, as the Fed raised their rates, our rates also went up. Same thing, as the Fed starts to cut rates, our rates will come down as well. The thing with the bond market is that we do look into the future as well. So we've already kind of priced in the fact that the Fed is going to cut rates in September. So we've known that for a little while. He came out this morning and made that statement. So, and then obviously the market's reflected an improvement in the market as of this morning as well. So that's something where it's hard to say exactly how much it will change, but the fact that they are cutting rates has already been something that's improved our rate sheet so far.
Sure, okay.
Yeah.
Yeah, I think FHA loans today are in the high fives, like 5.85 or something like that, FHA. The 30-year conventional is still probably 6.3, 6.4 right now.
Yeah.
So if we do see that they drop that federal funds rate, what that indicates to the market is the economy is doing okay. The inflation is coming down. They don't need to keep high rates anymore, because inflation is dropping. And I tend to see that impacting the secondary mortgage market or mortgage-backed securities. Right now, mortgage-backed securities are adding about 2.7% to the 10-year to give us that. But historically, it should be 2.25.
Yeah, exactly.
So if we can get them to lower that part, and the bond comes down a little bit, 10-year treasury, in September, we might actually see this market break open again. Yeah, I agree. Probably a good time to get pre-qualified.
I would agree. And a big reason why it would be a good time to get pre-qualified is because taking back to, let's say, 2020, 2021, when rates were super low, it was extremely hard to get into a home. And like you were saying earlier, with concessions being a very strong factor in our market right now, the more competition you have, the less concessions you can get. And sometimes, you don't need concessions because you have the necessary funds. But I think concessions have been a big factor in a lot of first-time home buyers, or just people just looking to save money. So I have friends that own multiple houses, and they always ask for concessions because why not? If there's not a lot of competition, you have, as a buyer, you have more wiggle room and more power in that transaction. So take advantage of the concessions. As rates come down, you start to lose that, and sellers get the advantage again. So. Yeah, and right now I subscribe to the Cromford Report. Experts in real estate. I watch them all the time to see what's going on. We were in a seller's market in a lot of the valley. Now we're in a balanced market for all of Phoenix. There are some spots where buyers have the advantage. Some spots sellers have the advantage. Particularly in the West Valley, we're seeing a lot more that the buyers are having the advantage. Because there are a lot of properties on the market, but not as many buyers. So again, this is probably a good time to start thinking about getting at least pre-qualified. So that you pre-position yourself. If you decide that you find the house that you really love and you want to make that offer right now, you don't have to go through the pre-qualification process. Once we write up an offer, my clients and I get together, we come up with a price, we have concessions listed in there. How long does it take to get qualified, to get the loan approved? And what's the process for that? So typically to get the loan approved through underwriting, it's about a week, maybe a week and a half. The process for that would be, the client reaches out to me, I get a pre-qual done, have their information. I have to disclose an official loan to them. So I have to trigger a loan. There's an official process for that. They sign their disclosures, non-binding disclosures, but just more so protecting the client from the lender, just making sure that they have the fees correctly, what to expect with the transaction, how to read a loan estimate, stuff like that. So we disclose those documents to them, they sign them, and then we can get the loan into processing and underwriting. So our processing turn time is within the same day. So I get the loan into processing, the processor that works with me goes into the file, she works on it, she submits it into underwriting the same day, and then the initial approval is a 2-day turnaround time. So she submits it on a Tuesday, we get the approval back on Thursday. So that can all happen in a week if everything goes according to our timeline.
Yeah, so the process will be, we make the offer, the seller accepts our offer. We then have a 10-day due diligence period where we're going to do our inspections. If there's appraisal needed because we're financing more than 80% of the loan, we have to get the appraisal scheduled, and the buyer pays for both of those, out-of-pocket costs for them. And then once we get that done and we tell you guys, hey, we're good, we want the house, everything looks good. Do you need any of that paperwork? You need the appraisal, of course. But
So the appraisal we order typically after the inspection because it is an out-of-pocket cost. So an inspection will cost between $350 to $500. An appraisal will cost between $550 to $750 depending on the county. So that's a cost I don't want them to pay for. We don't want to pay for the cost either. Sometimes we have to pay for it. So we have the client go through the inspection process, make sure that the BINSR has been accepted and everything has kind of been negotiated, and then we know we're okay to order the appraisal because everyone's okay moving forward. We can get an appraisal back within the same week. So typically, you have your 10 days. out of a typical 30-day close of escrow, you have your 10 days, right? And then after that 10 days, we still have 20 more days to get our appraisal done. So we can get it done with, a few days to spare,
right.
Just in case there's any issues with the appraisal.
It's really 48 hours by the time the appraiser shows up to giving you a report.
Yeah. So it's supposed to be, like, the county has specific turn time, so it's supposed to be 10 days. But it's been a little bit slower, so we've been getting appraisals back a lot faster. Same thing again, like if I order an appraisal on Monday, they'll typically plan it so that they can go inspect the property Thursday, Friday, or the weekend, and I'll get the report back by Monday again. So it's about a 1 week turn time.
So if everything goes smoothly, we can actually close early, like 20 days after we make the offer in some cases?
Yeah. So we actually have data for that. So it shows from start of application, how many days until we're clear to close. So right now we're sitting about 19 days. So that's, doesn't mean we close in 19 days, but at that point, clear to close means that we could have the buyer sign and they can fund the next day.
Sure.
So it takes about 19 to 20 days for a typical transaction with no rushes, no delays, just kind of, that's the timeline.
Right. So tell me a little bit about VA loans.
Yeah, so VA loans are my favorite loan product. So I think they're the most competitive loan out there. Their rates are typically going to be lower than your FHA or your conventional rates.
And no down payment, right?
No down payment requirements, so they can put 0% down. They have no mortgage insurance either, so no monthly mortgage insurance to add on to the payment. So typically you can finance more money at a lower cost than someone else would be able to. You can also get an approval with a credit score as low as 580 and also have DTI or debt to income ratio is a little bit higher than normal.
Sure.
So VA does say on their guidelines that it's a 41% debt to income ratio, but we can get approvals at 50, 55. Just depends on the person's situation.
Do you have to pay points for that, or in order to get it up to 50? Or
no. Just the only reason why I would have to pay points is if they want to lower the rate to get it to that ratio, but there's no additional cost to go over that 41.
Is there a funding fee with VA still?
Yeah, so there is a funding fee. So if you are disabled 10% or more, then you actually get that funding fee waived. You're exempt of the funding fee. If you're not disabled due to any military reasons, then you have to pay that funding fee. That's similar to how FHA insures their loans. VA does the same thing. So basically what VA does is it treats you like a 20% down buyer with 0% down. And in order to do that, they have to insure their loans with that funding.
Sure.
First use, it's a little over 2%. On subsequent uses, it's going to be a little bit higher. With a VA loan, you can't have more than one. So that's one thing that people don't really know, and they always assume you can only have one VA loan at a time. The VA gives you a specific amount of entitlement or eligibility to use that loan. If you buy a house and don't use all of your entitlement, then you have bonus entitlement that you can use for another home.
Wow. Cool.
Yeah, and then every year that loan
So the
amounts,
cabin up in Flagstaff.
Yeah, yeah, exactly. Well, you have to occupy it though. So if you were to buy a house, you would have to be occupying that property.
Oh, that's good. I mean, they're watching. At least they're watching the money. They're not just giving it away, but they're giving it to people who have served.
Yeah, exactly.
So, and that's another thing that I relate to quite a bit. Having been in the military for 25 years, I look at a lot of folks, particularly enlisted folks like myself, who came out and might not have that retirement income that will cover that, but just a part-time job may be enough to give them what they need to get that VA loan and get them into a house and make sure their family's taken care of, as building that generational wealth that real estate does. I saw a study someone was talking about this on the news the other day, that real estate's not a great investment because it only gains X amount of dollars. You should invest elsewhere, like in the stock market. But what they didn't really talk about was that if you don't own that home, you're renting, so you're getting nothing. So you're at least making something with real estate that is solid. It's never gone down for a long period of time.
Right, exactly.
We'll get dips, but right now our home prices are higher than they were in 2005 when the market exploded again.
Right, exactly.
So we had a dip in 2008, but we're well past that now.
Yeah.
So,
well, and I think I was looking at the numbers, between 07 and 08, taking that dip, and how long did it take those buyers to recoup their equity in their home. I think the majority of them, and it would be different for every single market, but a lot of them made their money back by 2016 and 2017. So, just again, it depends on the market, but you can, if you take any, like I was thinking like 10-year periods, so if you take any 10-year period, you should always come out on top. And I always say to first-time home buyers or people just looking to invest, it's like when you first buy a house, I'm not always looking about how much money I can gain or how much I can cash flow or what's my positive cash flow, but more so minimizing my losses, right? So gain will come after 10, 15 years when you pay down that mortgage, but your mortgage payment is locked in for that 30 years. I might have refinanced it 5 times in that 15 years to get it to a lower rate. So I always think about the future as far as when I gain money, and then as far as present, how can I minimize my losses?
And just as a homeowner on a 30-year mortgage, if I make one extra payment per year, I get that down to an 18-year mortgage, basically. So in 18 years, I have it paid off. At that point, the price of that home is part of my net worth. I take, if it's a $400,000 home and I owe $20,000 for a car or whatever, my net worth is still $380,000. Because I take what I own and I subtract what I owe.
Right, exactly.
And I end up with net worth. So I've created greater net worth than if I would have rented for
something.
Ever.
Exactly. So, and rents do go up, so that's something where, yes, there's times in the market where owning a house can be more expensive than renting, but that's very it's short-sighted, honestly. And there are people out there that say, renting is better. Like there's the New York Post or the New York Times will post something like that where it's just renting is way cheaper than owning a home, but you have to it is short-sighted, and sometimes you have to think about the long-term gain.
So your mortgage payment is going to stay the same for 30 years or 18 years if you pay it off early. But rents are going to continue to go up. So you're just paying someone else's mortgage at that point.
Right, exactly.
And you're not building any generational wealth. You don't own anything at that point. I heard that a lot with Gen Z. Gen Z would rather rent and not own anything and be able to pick up and move around. But eventually, and we see this in the statistics, when you hit about age 33, that's when people start breaking down and saying, you know what, I need to buy a home because I need some roots. I need to, if I'm going to build a family or if I'm just going to build my career, I can't be moving around all the time. So right around age 33, we start seeing it happen. Now, average home ownership age has gone up with what has happened in the market. But if we see a breakout in this market in September, maybe we'll be able to bring that statistic down and get some younger folks in there.
For sure.
And I'm doing some videos right now about new home builds, but there are so many resale homes on the market right now that if they're looking to make an offer, there's offers to be had.
And sometimes you can you can get more for your dollar with the resale home. And nothing against new builds. New builds are nice. They're newly built homes. They have incentives,
but they're expensive.
They're more expensive. So. You can get more for your dollar for a resale home, and you have a nice backyard, for example. It depends on the house, but you can have a pool, you can have this, and you're not paying full price for that pool because it's kind of built into that cost of that home. So
anything else you want to cover?
Oh yeah, so there's a investor only product. It's called a DSCR loan. Basically, it's a loan where we don't have to do any kind of income verification. And then no income verification. So basically, we just underwrite the property itself. Can the property's rent cover the actual mortgage expense? So that's been a really nice product for people that don't have.
So if you're an agent and you have an investor who's looking to see if they're going to get a return on investment, you can take a look at that and tell them where they're at. Personally, I don't work with investors. My goal is to work with middle income folks, working class folks, to get them a home. That's my mission. I don't work with investors at all unless I have a seller who needs to sell quickly. That's the only time. I have investors that I know that I can bring in and try to get a good price, a decent price for the home. So my goal is to find those people that really need the most amount of help and try to walk them through this process. That is my mission. That's my mission statement. So
awesome. Perfect.
Hopefully you can help me with a few of them.
Yeah, I can.
All right. Well, thanks, Andrei. I appreciate the time. Appreciate the information we can provide to everybody. It's a long video, but if you really want to know the ins and outs, sort of the nuts and bolts of what's going on in lending and how to get a loan, a mortgage loan, this is the guy who you can talk to. If you have any questions about that, give me a call, leave a comment in the video, and I'll get back with you right away.
Thank you. Appreciate it.